Hello, everybody. Welcome to this week's live stream, our market recap and outlook for what might be interesting in the days ahead. I'm David Jones, and we do this every Wednesday at 12:30 UK time. It's been an odd week, I think. We'll get into things in a bit more detail, but I'm sure I'm not alone in being surprised by the lack of reaction by many financial markets to the ongoing military situation between Israel and Iran. If we start off with, this is the Nasdaq. So the Nasdaq closed last Friday, about 21,600. We had a bit of a lower opening on Monday or Sunday night in the overnight trade, and then it's been pretty sideways since then. We've not had that much volatility. We saw gold start the week a bit higher on Sunday. Let's flip this over. There we go. That's on an hourly chart. So there's Sunday's open on gold, the move to 34.50. But since then it's been in decline. So it's off about $70 since that start. Oil's the market where we have had the reaction. We have seen that market move higher. But I have been surprised by the relatively calm reaction by stock markets, but we'll get into that and have a look at that in a bit more detail as we go through. So before we start things off, let's just get started with the housekeeping. Let's do that. Let's get the risk warning done, then we'll take a look at these markets. So spread bets offered in UK only, and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 85% of retail investor accounts lose money when trading spread bets and CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. All information that is provided during this seminar is for educational purposes only. The presenter is not a financial or investment advisor and is not authorized to provide recommendations on any instrument of any kind as any part of this presentation. The strategies showcased are applied on hypothetical scenarios. Any instruments that are mentioned throughout are cited only for illustrative and educational purposes. The webinar is not intended to be a personal recommendation or an offer of to buy or sell any financial product or instrument and must not be construed as advice from presenter. Capital.com does not represent that the material provided here is accurate, current or complete and therefore should not be relied upon as such. Any information that may be provided relating to past performance is not a reliable indicator of future results or performance. To the extent permitted by law, in no event shall Capital.com or any affiliate or employee have any liability for any loss arising from the use of the information provided. Any person acting on the information does so entirely at their own risk. Okay, that's that done. Let's start things off then. So let's start off with gold, actually. Let's take a look at that. So we had the start of military action between Israel and Iran over the weekend. And there was a lot of speculation about how bad that was going to be as markets opened Sunday night UK time for me in Asia trading. But it wasn't. With the exception of oil, we didn't really have that drastic a move. So I thought, well, let's start off looking at gold, because gold, traditionally, of course, a safe haven in times of trouble. And we did see that on Sunday night. We'll have a look at the bigger picture in a minute. But so last Friday, when trading finished, gold closed around $3,432 an ounce. So 11 p.m. UK time on Sunday, Asian trade. It opened about $20 higher, so about 0.7% higher than Friday's close. But you can see these are hourly candles that we're looking at here. You can see what the price has done since then. It's been in decline, even though the military action keeps getting, it continues and arguably increases in intensity. We're not getting a reaction from the price of gold, which I think is interesting, Nate. So you could take the view, well, considering what's going on from a geopolitical point of view, has the market just priced all of this in already and we're at the fair price for gold, which would suggest very little upside for gold from where we are now. So odd times, I think, in markets. But let's take a look at the bigger picture view for gold. Big picture view, it's been a great year for gold. Where did gold end last year? Around $2,620 an ounce, and here we are at 33. So we're about $700 and a bit higher. So the market's up. It's about 25%, 20 to 25% higher for the year to date. So it has been clearly a good year for gold, which I'm sure we know if we follow markets. But it has been, as someone mentioned in the chat there, it's still in this range. We last had an all-time high for gold just under 2 months ago, and we've been rangy since. Back then the all-time high was just under 3,500. We've been in this range. The bottom of the range is down around 3120, something like that. But overall the trend is up. So from a classic trend following point of view, I'd be a buyer of the dip. I am just surprised that we haven't had more of a move higher, or a sustainable move higher, this week in gold. So that's where we are. So for me, I'd be a buyer of the dip, but perhaps we're going to have to be patient if we're waiting to see if that $3,500 all-time high is going to get taken out. If we look at the hourlies on gold, I picked up, for me, that trend since, when is it, mid-May, something like that. There we go. So that trend is still going. So I think there's maybe a short-term trade on gold. That's one thing I was thinking about. So for me, if I thought that trend was going to continue on gold, then I'd be thinking about being a buyer. I would probably want my stop loss the other side of these lows from, I think it's last Wednesday or last Thursday. Last Thursday's lows were down around 33, 38. So if I was a buyer now, trying to get into this trend that's been going since mid-May and assuming it was going to continue, then I'd probably want my stop the other side of that level there. But let's see, it's been a fairly uneventful week, which is something of a surprise. So that's gold. That trend is still up. I'd be looking to buy the dip in the short term. I'd just be perhaps a bit conservative as to how high it can go, considering that it's struggled this week with what's going on geopolitically. Perhaps, the run for gold is done for now in the medium term, but perhaps we'll get another blip up. So for now, I'd happily still be a buyer here, but I'd only be expecting a run up, perhaps back to those highs from earlier in the week. So I wouldn't be madly bullish on gold, but that trend is still up since May. So an interesting week, and I'm surprised it hasn't moved a bit more violently, should we say, given what's going on in the world. So that's the price of gold. Interesting market. Let's see if we get the bounce over the next week. Of course, I should mention, we're doing this on Wednesday the 18th. Later today, we do have the latest US interest rate decision. So, that could well cause volatility in the likes of gold, given what happens with the US dollar. No change expected for US interest rates later today, but as usual, it's often about the press conference and what the Fed thinks about the outlook for rates in the US economy that tends to be the exciting thing in these rate decisions. So let's see how things fare a bit later on. So again, going into the US session this afternoon, I wouldn't expect too much excitement there until that announcement is out of the way. So I think we'd see perhaps a bit of a cautious market, but interesting to see a bit later on where these US markets are trading. Now silver, bit of a different story with silver. We've had this breakout on silver over the last couple of weeks or so. So the old highs for silver were back in October last year, up just shy of $35 an ounce on silver, and we had the break last week. Breaks are traditionally positive, and here we are pushing a little bit higher again today, back to levels not seen. How far back we've got to go? I think it's like a 13-year high, isn't it? I don't know if I've got the data. I haven't got the data going back that far, but it's a 13-year high on silver, up where we are now. So that's that for one. Again, is me where we had a fairly boring year or so for silver, and now I'd be a buyer of the dip. The only question is, well, where would my stop go? So that's so I'd be looking to be a buyer of the dip, definitely on silver. There we go. So for me, the closest I'd want my stop is the other side, probably of at least 35.50, this low from the 12th of June. So that was an interesting one. Stock markets, will gloss over those quite quickly because they're a bit boring. You know, they are a bit sideways. This is the Nasdaq. So we did have a fresh recovery high last week, but since then it's been a bit sideways. So again, I think that's one to wait until we get the interest rate decision out later today. Similar for the S&P 500, not too much going on there. And crude oil is the interesting one, of course. Whenever we see tension in the Middle East, you know, that's always going to have an impact on the oil price. What I thought was interesting, it rallied last week to $75, and it's not managed to take that out this week. Okay, again, despite, of course, what happened over the weekend. So interesting to see on crude if these old highs hold on crude around $75. But it's up 25% for the month, crude. So again, perhaps some people are thinking the move's gone far enough, but given what's going on geopolitically, you know, we're still getting some volatility there. So for me in the short term, those are probably the two interesting markets. The most interesting market is crude oil, given what's going on in the world. And that silver, because it has broken out to fresh decade plus highs, but overall stock markets still a little bit sideways. And similar with the US dollar, you know, we did have the move in the US dollar down to a fresh lowest for a few years. Here's the dollar index. So back to levels not seen since March 22. So 3-year lows in the US dollar index. It's rallied since then, but arguably that trend for the year so far is still down. So it looks something like that. So arguably, you know, still looking to be a seller of US dollar strength, I think, based off that. But again, it's one to watch later on today when we have that interest rate decision from the US. Let's see what everything looks like then. I'm having a few problems at this end with my laptop, so I might have to wrap things up a bit sooner than early, sooner than normal, because I seem to be having a few issues. But we'll carry on plugging away for now and see if things carry on working. The DAX, I didn't talk about the DAX, the European stock market. European stock markets have fared better than US stock markets for much of this year. What's interesting for the DAX, I think there's a big level to watch for me. We had these lows in the DAX back in the end of May, when I think there was a surprise announcement from Mr. Trump, President Trump, about tariffs for the EU. It was on a Friday afternoon, I can remember it, about half an hour before the US market opened. And we did see the market sell off quite quickly and then bounce back. We're back to these levels again. So if you thought that the sell-off in the DAX for the month so far was overdone, then this is an interesting area to think about buying, you know, because we've seen this sort of 23,250 area hold up the DAX. I think if we start to lose that, the risk is for a much deeper sell-off. So let's see what happens. But I think I am going to have to wrap it up here because my laptop is really lagging. So apologies for that. But I think the big market to watch later on today is the dollar/gold to see what happens with these interest rate decision. Does it wake up stock markets a little bit because they are broadly sideways? And crude oil obviously reacting to what's going on the world stage, but for now can't break $75. So a short run through the markets there. I've been surprised by how quiet things have been this week. Let's see how things are over the next week and how things react to this interest rate decision later today. We'll wrap things up there because a few tech problems, and I'll come back and do it all again next week.